Right here is a very strong uptrend, where instead of having the gap up filled, price continues to climb. Given these swing points, there are a lot of flexible options no matter what happens next. In these kinds of situations, whether it's a breakout higher or a major reversal down, movements are likely to be large and relatively quick. We choose the lowest point here and the highest point here, since they're key lower and upper thresholds where price is likely to accelerate significantly if they are passed. Pointing this spiral down ensures there can be wider coverage arcing to the right. Then for a balance of shorter-term context, point upwards towards the more recent high point, which also allows this spiral to closely approximate the current neutral to bearish context. Then with first contact on the spiral, something important could happen soon. Again, we narrow down the price and time range of a significant area, but we still have to look at other factors such as basic price action as to what can develop. It could be a reversal back down, but we would have to wait for further confirmation of price decisively closing lower. So it could be useful to complete the rectangle with those horizontally oriented spirals. So if a downward reversal does take place in the near future, the price areas near these intersections within the rectangle can become relevant and serve as supplementary confirmation for Fibonacci retracement levels. Though after some time, a bearish reversal does not take place and this information cannot be put to use. Though with that first spiral arcing down to meet climbing price, this entire setup is not completely irrelevant. The mid-$18 range at the end of September still identified an important area. In this case, it was where the breakout really began to gain traction. Remember, we generally want that coverage to the right side. Specifically for the downward context into early October, this is over. But there's still extension covering to the right side and going up, which produces a similar situation where now the uptrend can begin to face some opposition at this approximate area where price is contacting the spiral. Pay close attention to the short-term developments. Significant events can happen soon, but it's not guaranteed to be a bearish reversal. And here it is, the spiral identified the approximate area in price and time where this major event happened, in this case, a bullish continuation. And normally the spirals that face horizontal directions extend quite far, so they don't usually become relevant. Unless it's an extraordinary case like this where price does match the sharp incline to make contact in a timely manner. Watch short-term developments especially closely here since volatility is particularly high. Similar to previous times, there's the normal behavior of an uptrend meeting a Fibonacci spiral to go into more neutral to bearish movement. But unlike previous contacts with the other spirals, there have been some sharper drops unlike the mostly flat movement in between bullish continuations. This is quickly progressing into a moderate downswing, and contact is still maintained with a Fibonacci spiral, except now the role has been reversed, due to being in a current downswing, which is now encountering opposition on the spiral to make a shift back towards more neutral to even bullish movement more natural. Like with other analysis tools, going further into the future in a longer time frame can naturally lead to less relevant and accurate projections. That's why most attention and the best results usually reside with the vertically positioned spirals, which are often medium to small sized. And speaking of smaller spirals, using smaller spirals based on the candles from these reversal areas produces expectedly short coverage to the right side. In fact, the one on the left doesn't even go far enough to be useful. Though if you still want to base a Fibonacci spiral on a single candle based on its highs and lows, one option is of course to flip the orientation to produce spirals with more coverage to the right side. However, this may not always work as demonstrated here. Even before the breakout gradually began towards early October, it could be seen the ends of these spirals didn't even extend far to the right. So in such cases, using a single candle will not be sufficient and you would have to use some larger range from the start to end point, which not only have longer term coverage towards the right side, but approximate the trend by going up and to the right side, and going back to a rectangle composed of Fibonacci spiral pointers, except with a different orientation where there is no major intersection of spirals within the rectangle. We can see intersections of spirals taking place outside of the rectangle towards the right side, can still identify approximate price ranges of interest in terms of retracement levels price could fall onto, in the event there was a more substantial downward reversal. Then later on we see another case where spirals can extend far into the future and still be decently accurate at identifying significant areas. But generally it would be better to use newer spirals based on more recent price action as time moves past the intersection of those first two spirals near the end of 2021.